All right, everybody, welcome back. Happy Friday. Pleb Underground, the signal without the slop. Guys, we've got an absolutely awesome interview. Joining us today, we've got the co-founder of the Bitcoin Opportunity Fund, David Foley. And before I bring up Ulrich, my co-host and special guest, you guys know the deal. We're going to show some love to the Pleb Underground sponsor, and we are going to be right back to dive into this, what should be a very interesting conversation. Let's do it. Here we go.
Pleb Underground is sponsored by Archimedes Emporium. Discover the pinnacle of precision engineering, starting with their Bitcoin logo wall clock, meticulously machined in Maine from a solid block of aerospace-grade aluminum, ensuring unparalleled durability and performance. Experience the difference of a product made without compromise. Head on over to Archimedes Emporium.
All right, let's bring co-host onto the stage and then the special guest, Ulrich. What's happening? He's waking up. Come on. Hey, look, we've got David Foley over here. Thank you so much for joining us. He's going to wake us up.
Hey guys, great to be with you. Thank you for having me.
Absolutely. Happy Friday, man.
Yeah, happy Friday, all of you.
Okay, we're talking about this before the show. I want you to give me the rabbit hole story, because I'm always very fascinated. I'm always fascinated in general by the rabbit hole story, but specifically when it's people who come from the traditional finance system. I'm very curious.
Yeah, so my background is kind of lived in New York City for the first 7 years of my career as an investment banker. And kind of heads down doing corporate finance and leverage finance type transactions. Ended up in the hedge fund community about 20 plus years ago. I've been an investor in the gold space probably since about 2000 and maybe 3 or so. Larry Lepard's my brother-in-law, and so he's the one who kind of got me involved in the sound money space as he got involved. And I invested in his funds and would do some co-investments with him, things like that. I was in the distressed debt and value equity hedge fund space for most of that 20 years, or I guess about 15 years. And then I joined Larry actually at EMA in 2020. And we've been investing in the gold and silver miner space and the Bitcoin space that whole time. I will say, to answer your question, the rabbit hole, Larry and I first started talking about Bitcoin in about 2015, and he saw the light earlier than I did. I would challenge him and say, it's not gold, it's different. There's too much risk to the network. You'd hear some MIT core dev guys up here in Boston would talk about, them being the fragility of the system and the network. And so part of me was, unfortunately, a non-believer a little bit in the early days. And it was around 2019 and 2020 that, I really kind of saw the light of it being digital gold. Larry was very persistent and really I spent the time at that point to really understand it more. Just like a lot of people in TradFi, I think for those 4 years of 2015 through 19, I just didn't put the time in. I was too busy, and it just felt too lazy and easy to say, no, it's not gold. And boy, certainly you regret that, but here we are. And I think, sometimes we all have to learn at our own speed and pace and spend that time till you see the light. But I've always been a gold sound money guy. And I think that, for at least going, I guess, about 15 years at that point. And I think that helped me to eventually cross that chasm and understand that Bitcoin and gold now, I believe, are the two non-counterparty monies in the world. And I know we'll get into that a little bit with Tether buying gold mines in El Salvador. Mm-hmm. But to me, and Ray Dalio has talked a lot about that lately, that gold and Bitcoin are going to be the two most prominent assets as we go through the next decade.
I want to interject real quick. It's funny that you have sort of like an apologetic or a regretfulness about your story. And it's like, I wish. And it's like, no matter when people get in, 5 years ago, 7 years ago, you hear about it beforehand and you say, I wish I did then. But then you look forward and it's like, here we are. And it's like everyone's playing with, relatively speaking, house fiat money. And it's like, if you've been in any amount of time, any number of years, you're probably profitable. And it's like that perspective, though. And I think it's humbling, but at the same time, for all the people who are sitting on the fence, look at the people who've been here years and look how we react. It's going to be okay. Don't be scared. Jump in, you know?
Yeah, no, some of that's just my Irish brooding nature here of looking back with regret. But all kidding aside, look, I think that's human nature, though. We all do it, right?
Yeah.
I have a lot of like business school friends of mine now that are really inquiring with me about Bitcoin, and these are guys in the private equity space that want to learn about it, want to invest, or looking to invest in my fund type thing, and I think that I've said to them that you think you're late because you've watched this thing go up so much, and yet you're not. You're still so early. It's a $2 trillion asset class, and I would argue it's even smaller given the lost coins in a world of 900 trillion to 1 quadrillion of assets. Like, this is still so early, and so to your point, I agree with you, Ulrich, that but it's like everything, right? It's human nature that we all look back and say, someone, like new people coming around today that I talked to from business school, they're like, this was at 20,000 a couple years ago. I missed it. And for guys like us, it's like, well, we know guys that bought it at 250, and you're like, man, I regret that. So everyone's going to have that. These guys are regretting the fact that they weren't buying a couple years ago. In fact, I teased them. I said, a couple of you guys were coming to me a couple of years ago, like, everything okay, David? Like you made a mistake here going into this space. And it was like, no, we just kept buying. Our view is that you just keep stacking. So, we understand the volatility of it, and in any event, but yeah.
And just for context, I often do this during our daily live show when I find these. So there's a lot of posts, right, especially from like the bitcointalk.org forum and stuff like that, where you have people that missed the boat at 30 cents. There's people who missed the boat and were too late at $2.
Yeah,
okay,
yeah.
So I try to bring that up as often as possible, because it's just to let everybody know, like, we are accustomed to things being centrally controlled and essentially being dynamically created, whereas with Bitcoin, as we know, that is not the case. So as a result, this asset, I think that we don't actually understand where it's going to go.
Yeah.
I mean, the real, what I mean, like the real moonshot. But what I wanted to say was, I'm hearing an echo in somebody's mic, but either way,
I'm muted.
Oh, okay. I did want to ask you, though, how many touches did it take before you decided to jump in? Because you said that you have like regret from not getting into it early enough or soon enough, but how many times did it take before you're like, okay, this is starting to make sense?
Well, I'll give you an example. I can remember, and I've teased Larry about this. I can remember sitting with him at Thanksgiving in 2017, literally at the Thanksgiving dinner table, and we were all talking about as a family and about Bitcoin. And remember, Bitcoin, as you might recall, was moonshotting at that time.
Mm-hmm.
And I can remember I was like, well, wait, no, I don't understand. I still don't understand. It doesn't make sense to me. This is just a speculative bubble type thing, and people don't know what they're buying. And then, as you recall, Bitcoin came back down, in 2018 and 2019, for a while there, you're like, well, see, I was right, and as you recall, it hit 3,000 in 2020. And I think you look back on that, you're a little persistent of like, well, no, maybe I'm right. But again, I think by 19, having spent the time to study it more, you were able to kind of dive in and say, no, I need to have some allocation. So around 19, it was okay. I need to have some small allocation to this asset, right? The only wrong answer is 0, as Larry used to talk about with me. And then by 2020, obviously, we were diving in deep, working with Larry, and then James Lavish and I started the Bitcoin Opportunity Fund. Started talking about that in 22, I guess, and really launched it in 23. Late 22, early 23, we launched it in the middle of the crypto winter, and so that's kind of the kind of baby stepped in 2019, dug in deeper in 20, and went harder then from there.
David, there's a lot of stuff that's happened recently. And before we get into, we want to talk about gold. We want to talk about the Bitcoin treasuries, but
yes,
you talk about James Lavish and you running the Opportunity Fund. Lawrence is a part of it. we've been in what I would say is, I guess, almost a year-long sideways crab. I mean, we go up a little, we go down a little, but we're right back where we started at the beginning of the year with regards to price. I think we're at 110 right now. Early January, we're at 104. Just not what you normally expect from, I guess, the last year of a bull market. And maybe guess what? Fed's going to reduce rates. We're probably going to have a October. We're probably going to have a nice November, December, maybe even January too. My question is, like, for someone who's in traditional finance and you have this fund and it's got to make money. How do you make money with the opportunity fund, Bitcoin focused on Bitcoin products, and everything in Bitcoin is either getting diluted or it's sideways?
Sorry, I got my mic back on off mute. Yeah, I think, let me share a couple slides actually here. I'm going to share my screen on Bloomberg here. Let's just
Did
go
we
through
lose that one? Where did it go? Oh, there
You
it is.
should
I
see
see
it. You should
I'm
see
gonna
it pull up here. Yeah, and then I might jump to one other chart, but here's a Bloomberg chart just to answer your first question, Oricon. And just go back to 2019 here on grab my glasses. 2019, you can see kind of that Bitcoin rip in COVID with the Fed money printer go burr with 20% money supply growth during that period, and Bitcoin and gold, if we overlaid that, they're both flying. And then, Bitcoin settling back down, one more rip up, and then Sam Bankman-Fried in the crypto winter, and or you want to call it 4-year cycle, whatever you want to call it. It was a painful crash in the space. And again, as we saw that, we said, this is time to start the Bitcoin Opportunity Fund. There's great value here. And so I want to point out a couple of things. One, our view is, no, this asset class is good for real. It is digital gold. Gold and Bitcoin will be the two soundest forms of money in the world, Bitcoin being the soundest. These are going to grow massively. And so we want to come at this space. The Bitcoin Opportunity Fund, we buy public and private companies, invest in public and private companies in the Bitcoin space. We do hold Bitcoin as well as just a pure Bitcoin holding in the core holding in the fund. And then we invest in Bitcoin treasury deals. We're getting in at private offerings at around 1 times MNAV. So we quite like the asymmetry from there. But to answer your question, yeah, this reminds me right now of, like, look at 2024. We did a bull market flag. I'm going to zoom in here. Let me zoom in here for a second on just the last 2 years. In 2024, we rallied hard coming out of that hole. In 23, we rallied up to 73,000. And then, as you recall, from March of last year to basically September, it was a bull flag. Like, you were just kind of languishing. And I would argue that Bitcoin Twitter is kind of cranky right now and nervous, and you can't remember, but people were like that last year. And then I would argue it became evident that Trump was going to win. Right around October, it was clear that Kamala was in deep trouble, and this thing started to rally. And then the election happened, and it rallied and blew off top. And then you had another bull flag in Q1 of this year, and then we've rallied back on some of the congressional approvals of things that are helping the Bitcoin space. Obviously, strategic Bitcoin reserve talk, Bitcoin treasury. I mean, there's been a lot of things that have
frameworks, Clarity Act,
all of it. Clarity Act coming. I think that's the next catalyst, and I think that along with the dovish Fed next spring are going to be the next two big catalysts, in my opinion. But I would argue, if you look at this, we could potentially be entering into another bull flag. And by bull flag, what that means is you get a rally, you kind of go sideways, chop to down, but people think, oh my God, it's falling apart, but it's not. It's a bull flag. It's like a race car breathing here, changing its tires in the pit stop, and then a rally again. And then you had another one last year. I wonder if we're setting up for that now, and maybe you've got sideways chop for several months. Again, low time preference though of Bitcoin. We're not worried about this at all. One Bitcoin is still one Bitcoin, and it's going to be the scarcest asset in the world. And given what I think they're going to do with the money printer, I mean, you can see it this morning, right? Stock markets take off, Bitcoin takes off, gold takes off this morning because the job numbers are bad. And the thought is, oh God, the Fed's going to have to print massively now. And then it sells off now because, I can get into a different chart and show you why I think then it sells off, because people start thinking the Fed's behind the curve. And I can show you a chart that shows you kind of what happens typically when the Fed starts cutting rates. Usually assets sell off. So to finish the long-winded point, I just wonder if we got some sideways action, but then you've got a Clarity Act coming later this fall, which in my opinion will be important because Bitcoin will get dubbed a true commodity. CFTC will regulate it. Why does that matter? Because institutions that are interested in this asset class, if they know that it's been codified with a stamp of it's a true commodity, that gives career risk CYA for many institutions to say, we own a 2% position of gold. We need a 2% position of Bitcoin. Our XYZ University endowment buys that position and off we go. So these are all critical milestones that you reach in the space. And then, in my opinion, when Trump gets a hold of the Fed, it's going to be like the fox in the hen house. They're going to print and QE. They're not going to care. And because they have no choice, they've got to inflate their way out of this. Scott Bessent has been well aware of this for a long time. Scott Bessent had a 22% weighting in gold right before he joined the White House, and I assume he still has it. I don't believe you have to sell your gold assets like you do. You have to sell your stocks when you become Treasury Secretary. I don't know that, but he was a gold bug. He himself labeled him as that. He understands the concept that all avenues are pointing toward gold and Bitcoin, sound, scarce assets over the next decade, given the debt problem, the demographic problem, and the fact that they are going to have to print massive amounts of money to sustain this debt-based system.
I mean, in all fairness, he doesn't have to actually declare the gold that he keeps in his home. So, I mean, I'm sure he has, I'm sure he has shares of, gold miners and stuff like that. But like this is part of the, right, the self-custody angle. So sure he didn't get rid of any of that.
I think that's right. And one other chart I'll just show up because we're on the topic. Stack Hodl has a great site, Stack Wisely, and one of the things that he has on his dashboard, he's got about 6 main items like pi theory, but power law is always the simple one that makes sense to me, and this is one of the 6 that he uses. And so this is snapped from his site yesterday, and basically, as most of you guys know, probably out there, like I think the power law theory makes a lot of sense. That as networks grow, and you look at the log of price on the y-axis and the log of time on the x-axis, that things grow at a natural curve. Now, the bad news for Bitcoin is the steep, sharp rallies are kind of behind you. You're now compounding at about 28% a year at the median on the blue line, and occasionally you overshoot. Every 4 years you overshoot and then you undershoot that median, like Sam Bankman-Fried era time. But look, when you look at this today, the median price, meaning what power law's network growth theory, saying that more and more people are coming into the space every day, just like cable TV buyers in 1980 was growing every month. More people were getting cable TV, and then you've built a scale network. That's happening in Bitcoin, the way it happened in cell phones, cable, internet. So we're at like what, 109, 110,000 today on Bitcoin. The median would tell you should be at $127,000. We've undershot this thing right now. Like that gives me confidence. Like we're not too early. We haven't even overshot in this upcycle the median line. So like this kind of gives me pause. And you fast forward 6 months, basically it would say that it's about over $200,000 per Bitcoin when you wake up in 6 months, if you believe in power law theory. So, again, I have no doubt this is just a matter of timing and when that this stuff plays out. But, we continue to feel very good and confident about where we're going.
Yeah. Oh, go ahead.
I have this is a live show, and people bring up things that we like to include the audience on the conversation. And Bunny said something interesting. He said Bitcoin to gold pairing is interesting. We're still at 2021 levels when priced in gold. Now, I didn't bring up a chart to show that, and maybe I'll show it while you're talking, but I did kind of prep a conversation with regards to the S&P to gold. And I think that's even more interesting. And trust the title of the chart, but it's essentially the S&P to gold ratio over time. And what you see is, if you look at the S&P in 1999, 2000, right before the dot-com bubble, that was kind of the last time the S&P was really, really high with regards to gold. But we've been in a plus 25-year relative bear market, crab market, with the equities, against gold. David, and if, as Bunny said, Bitcoin is still kind of in the 2021 levels, which means if you look at it against gold, like it really hasn't grown. It's really not beating it. And then it has me thinking, like, is this some sort of like hidden world unit of account that no one's admitting, but that gold has more importance with regards to defining value than everyone's letting on, whether it's Jamie Dimon, whether it's Bitcoiners, whether it's gold bugs like yourselves, or maybe, guess what, maybe somewhat you guys are somewhat more right than us. What, I'm rambling. What do you think about this chart? What do you think about what Bunny said? What's gold doing, and how does it relate to Bitcoin?
Yeah, I think a couple of, so I have a lot of thoughts coming in my head, are given all great points you're making and questions. That I think that, look, I think there's a couple of, actually, let me pull up a chart myself here. I'm going to talk my way through this here. I think that this is how my brain thinks about it. And I'm going to probably bump around to 3 charts. The first is, hopefully you guys can see this, if you can pull that on the stage.
I'll lose it. There we go.
This is,
come on. Did I click it?
No. That Kamana, you have to pull that on stage. Basically, it's from Incrementum Capital.
Hold on, time out, David. Am I not seeing it? Phil, can you pull it on?
Yeah, I'm clicking.
David, pull it off and bring it back on.
Yeah.
Okay, no
Live show. I love when everything.
No problem. And I apologize. I apologize for being high maintenance.
No, you're not high maintenance at all.
We wish other future guests, please. Oh yeah, this one is not working.
Yeah, this one is like, it's sorry, guys.
No problem.
So it's live and things are falling apart.
Well, you know what I'm wondering? I'm wondering if you have to remove yours from the stage or something.
I do. I'm in it.
Oh,
I think so. Try it again.
Okay, I'm gonna try it one more time, and if not, we'll go back to your chart.
And we have to beat. Maybe we're in here.
Here we go.
There we go.
Perfect. So this is similar. This is similar to what you're talking about. It's slightly just it's a cousin chart to what you just showed, but this is how my brain thinks about it. This is Incrementum and Ronnie Stoefferle in the gold space, who we know, and he's out of Austria, but he puts out a great piece called "In Gold We Trust." And so you guys, anyone that's curious about the gold and silver market, you can follow it. But look at this back to 1971. This is commodities index total return versus the S&P 500 ratio. And I would argue that what you're going to see is from the 1970s, commodities were painfully underinvested in. It was a lot like where the era we're in now, where the markets have become so financialized and we didn't invest in stuff. And then there was the inflation beginning, though, with the Vietnam War and Johnson's Great Society. And guys like even Warren Buffett, as you might recall, closed Berkshire Hathaway in '69. He said, this is an overheated market. He didn't like the feel. What it set up for was we had underinvested in commodities, and you watched it fly throughout the 70s. Gold was up like 20x during the 70s. And if you say, well, I didn't get it at 35, it was up like 8x at a minimum if you jumped on in the early 70s. So gold was the best performing asset during that sector, gold miners too. And then we went back to kind of the 80s and Microsoft and Intel growth, and then the 90s and the internet. And you can see kind of, stocks were overbeating kind of commodities then throughout the 80s. And then commodities actually had a comeback there heading into the late 90s. But then you kind of languished during the internet era. We underinvested in commodities. Look where we are now. We have underinvested in commodities. Jeff Gunleck of Double Line talks about this a lot. We've underinvested in commodities massively over the last, basically since the Great Financial Crisis.
Yeah.
And what we're at now is it's the same thing you're talking about. The S&P 500, when you had your chart, is still way overvalued relative to gold. And gold is kind of the poster child for commodities too. I mean, it is a commodity, but it's sound money commodity. It's a precious metal. But this gives me confidence of why gold is ridiculously cheap. Secondly, we can get back into the debt and demographics of why I think gold is a canary in the coal mine, telling you that people will want to get off of fiat-based currencies, will not want to own treasury securities given the risk of treasury yields needing to go higher, given that real returns on bonds are going to be low given high inflation globally. This is not just a U.S. problem. This is a global problem. And I think what you're set up for is like, this is what gives like Larry and I pause in gold. We're like, man, this is just beginning. Like gold's going to fly. Bitcoin's going to be the same thing as gold. This is a digital version of it, is what we think of as a store of value. So that's point one I want to point out. It kind of relates to what you're saying is, yeah, gold is cheap. Now, why are people coming into gold so aggressively? And I think it's because they see global liquidity going higher, because they see the debt demographic issue. Again, everyone's realizing that inflation's going to persist. Like the tariffs will cause some sort of ripple. I don't know what that is. Yeah. Is a tariff going to hurt the consumer in the pocketbook? Sure. I think we're all seeing that in all areas of life, from health insurance, auto insurance, to groceries, to just getting stuff fixed at your home. It is persistent. Secondly, companies will try and push it through to consumers like they're doing now on the tariffs. But I think what's going to happen is the companies are going to get hit at the corporate profit margin line. That's probably the biggest risk to the stock market right now. Again, I've got some other charts to go into that in a minute. But I think what's happening is gold, a few things. One, there was a run on gold and silver by the central banks of the Far East, like Turkey and China, over the last 18 months. We were watching it. We were watching London, the London exchange and the COMEX exchange in New York. The amount of physical gold and silver was just being depleted. It was all getting shipped to Asia. What's happened now, if you want to get physical gold delivered in London, it's 2 months before you get your physical gold. Why? They're short. They don't have it. And that's why you're seeing gold now and silver taking off. Markets are realizing
they're buying
that you're waiting months to go get your physical. Now, in silver's case, the reason why that's very interesting, worth paying attention to, 20% of all silver demand comes from the solar industry. And solar is growing like a weed in China. There's great stuff on Twitter this past week on that. Like, China is going massively after AI too, as we know with DeepSeek. They're going massively after. They're literally like 3xing the United States in terms of this AI high-powered computing build-out and energy. One of the main sources they're going to is solar. And so the white etchings in a solar panel, that's silver, because you can't use copper on silicon. You will destroy the silicon of a solar cell. So silver, 20% of silver demand comes from solar. The demand for physical silver from guys like Tesla, and Elon Musk has talked about this just 5 months ago. He thinks the full future of energy is based on solar. He's talking his book. He's got a solar business. But the reality is with battery capture, and I've debated this with guys from Texas that are really smart energy guys, and they're smart. I don't disagree with them. Natural gas is going to see a huge uptick. Nuclear is a big part of it. It is hard to get nuclear through NIMBY issues in any neighborhood. We all know that. Solar is much easier, and I think Musk is right. I can foresee a moment in the next 3 to 5 years where the United States is offering families handouts like they did during COVID, $40,000 to go put solar panels on your roof because you have an asphalt shingled roof that's sitting there dormant all day, even in places like Massachusetts where I live, not California where Mark lives, or Florida where Phil lives. Like, they will pay you because that's how we're going to build out this grid. Like, I think Musk has it right. And so that's a lot easier than putting natural gas pipelines, digging up roads, putting in new, and harder than getting NIMBY nuclear in backyards, even though I believe nuclear fusion is good and we need all of it. But I'm long-winded. Silver has been drawn down physically for uses like that. Gold has been drawn down physically by the central banks in the East. And what's happening now is the far West, Europe and the United States have woken up to this fact. You saw JP Morgan, for instance, bring $4.8 billion worth of gold back from London in Q1 this year. Why? Some people speculate because Bessent and Trump want them to refill Fort Knox. Some people speculate that just people see the run on the physical, and JP Morgan's just moving it closer here because X is based on futures trading of gold and silver. And if you can't deliver, if JP Morgan, God forbid, could not deliver on contracts, that will not look good in markets. They need the physical here. Either way, to land the plane, gold and silver are physically short globally because of the run on both over the last several years. Now the West is waking up to it. That's what you're watching. Moreover, I think gold and silver are also predicting what we are going to see, a dovish Fed starting next year, really dovish. Think Fox in the hen house when Trump gets his way with it. And then the debt and demographic thing, which will absolutely be a main issue over the next decade. And this is a global issue. This is not US. All fiat currencies are going to be forced to print, not just the US dollar, not just the euro. There are two non-counterparty monies, as Ray Dalio calls them, in the world. It is gold and Bitcoin. What does that mean? Gold has been a store of value for 3,000 plus years because of its scarcity. Its supply only grows with population growth. You got to dig it out of the ground. It's not easy to get. You need physical labor to do that. There's just not a lot of it in the earth. There is some in asteroids, but that will take you 27 to 40 years and billions of dollars to go get it. The Winklevoss twins have talked about that as a shot on gold, shot against gold because they love Bitcoin. But our view is we love them both. The reality is when stuff hits the fan with inflation, people run to the scarcest assets in the world, whether it's real estate like Dana Point, California, oceanfront real estate, or gold growing at 1.8% supply a year. It is scarce, and Bitcoin grows at less than 1% a year, has a halving cycle every 4 years, meaning in 2028, the supply growth rate of Bitcoin will go to less than 50 basis points a year and ultimately capped at 21 million. And Gresham's law has taught you that in all credit cycles, whether it's Weimar, whether it's Venezuela, more recently, people run to scarce assets to store their value. You can't just go buy Apple stock every day, especially at these valuations. So gold and silver, per these charts that you showed, and I'll round out the point now, per your chart you showed, gold and silver are way undervalued, and Bitcoin is super undervalued given how it is still so early. So I'm long-winded there, but that's how my brain thinks about it.
No, I appreciate it. Absolutely. The point that you made about JP Morgan buying gold, I think that for the people that believe that, Donald Trump and Bessent, put in a mandate to replenish the Fed or anything like that, I think that's JP Morgan placing bets for themselves. Obviously everybody's kind of speculating, but I did want to ask you this though, because earlier, you're talking about stable coins, and it just got me thinking, and it's something that I think a lot of us wonder. And I mean, I've made this assertion in the past. I believe that stable coins exist to continue to kick the can down the road, right? Because essentially, so our monetary system, as most people know, is entirely created out of debt. Okay, so this kind of like the original sin. Well, there was the original debt, and that debt, essentially, if it ever gets fully repaid, there simply just wouldn't be any money in the system because all the money would have gone back. It's kind of like render unto Caesar what is Caesar's.
Yeah.
So I'm kind of wondering, like, is stable coins? I think that stable coins is just a can kicking measure to keep things going. What are your thoughts on the stable coins, and are they going to be an effective can kicking measure, or do people see through the charade? Because sorry,
that's a great point, Phil. Again, I keep going back to it. I just want to pull up this chart on stable coins to talk about it. Like, Coinbase put out a report yesterday with kind of their update on kind of where we are in the markets. And I just want to point out like a couple of things. I mean, you can see kind of stablecoin growth in 21, 22. Interesting that this other stablecoins, these are all sorts of other ones, but the main Coke and Pepsi equivalent, the two dominant players are Tether, which is the light gray, and USDC, which is blue, which, again, in 22, they were rallying massively, perhaps because, in my opinion, people were running to these things during the crypto winter to kind of be the safe harbor to run to, go park your crypto in this and kind of just sit tight there. So it became, call it a $175 billion market when you add those three up. Then it dipped down, partly because people then offloaded out of the stablecoins into Bitcoin, into some of the crypto and altcoins. And then you can see here over the last year, we've gone from 150 billion market cap across the three. Again, Tether and US in circles being the biggest ones, but Tether's the bulk of it. And now it's a $260 billion market. Now, I think that gives you pause. Here, I'll stop presenting there on that. It gives you pause, right? Where you say, well, okay, maybe this thing, I think as Roman points out, it does help keep the dollar going, right? And it grows the user base, as you're saying. I agree, but there will be demand for it. That's what you're seeing, right?
Yes.
For instance, in Argentina and Africa, people were running to stable coins to get you access to the dollar. And go ahead.
Quick question. Do you think that demand is that good for Bitcoin or bad for Bitcoin?
I think it's good ultimately because it starts to wake up the world. And here's why. And I'm being long-winded, but let me play this out. I get it. You're in an African nation. You have $5,000 to your name equivalent, and you're like, how do I protect myself against this inflation? I can't get a bank account at Citigroup. But I have a mobile phone, and I can get a Strike app, and I can put this thing on Tether right away, and I can get access to dollars. And now I've hedged my family and protected it because US dollars, I'm told, is the safe haven here in Argentina or in Africa or wherever. That still works right now. So that will kind of be a use case. Moreover, perhaps payments, rails, the U.S. government can enforce it where people can't buy U.S. treasuries or deal with U.S. payment systems unless you use stablecoins. I think that could be a big deal for stablecoins. However, where I think stablecoins are getting overhyped, the way Doge was being overhyped back in like November and December, where people are like, Howard Lutnick just said they can cut $2 trillion in the deficit. Like I've heard estimates from like $40 billion to like 92 to 150 billion is the most we've cut in Doge. I'm not picking on Howard or Trump and them. It's just math and it's debt. And Elon kind of surrendered partly because he had to protect the Tesla stock price, but partly because I think they see this is a broken system. So I ask you, if that same Argentinian or African person has that phone, might they run to Bitcoin on their next purchase to hedge against and protect against? And so therefore, I welcome the stablecoin discussion of the government. Get people involved that you need to get out of fiat, get on something stable. They will conclude over time that there are only two non-counterparty monies in the world, though. And Bitcoin, there will be that easy digital version to buy. So I just don't think stable coins are going to go to $3 trillion like the government's telling you in the next 6 years. I think when Gresham's law kicks in, they don't want to be hedged with the dollar. They're going to want to go into Bitcoin. So that's where I see it going. I think it's a little overhyped. I think, the only way it will be a big deal is if the government enforces it and says, you've got to use these rails. I have no doubt, though, that blockchain is going to grow in usage. I mean, I think the JP Morgans and the Wells Fargos are working collectively to put their own stablecoin together. But that's a little bit like Target giving you a rewards card to use their credit card to get Target points. Well, that's kind of interesting, but not a big deal. It's not. I just don't think it's changing the world. Bitcoin is changing the world, but I welcome it. Bring stablecoin people in. It forces people eventually to learn about Bitcoin. So that's how I see it.
It is important though, because like you say, the African, the Argentinian, anywhere around the world, when they see that, look, they got three choices now. They got their horrible local currency, they got a strong fiat currency, and then once they realize, hey, that strong fiat currency, it still has some holes in it, and then they say, well, that Bitcoin thing, they've been talking bad about it, but it's been for 10 years, it hasn't really gone anywhere but up. A year down here or there, but people have to be exposed to that for a while. And we're seeing the exposure here where it's like no one except for the most curmudgeon-y propagandist, filled people are still saying that Bitcoin's a scam. It's like they recognize that Bitcoin is a respectable asset, and it's even going to be more recognized with all these bills coming out.
Yeah.
But it's like now the world gets to say, hey, the dollar's not all you thought it was. Yeah. And that's important.
And again, it's a global thing. It's not just the dollar. It's every fiat currency in the world, to your point. And I think about it, that's the one challenge gold has it's not going to be able to be purchased so easily from those people with the cell phones, for obvious reasons. Whereas Bitcoin, in literally about 10 minutes, they can have a Strike app up and running. They can then be buying Bitcoin 10 minutes later. The point is, it's much easier. Why? And that's why I think Bitcoin will be, so massive. I mean, just pause for a second. There are literally 19.8 million Bitcoin have been produced. Probably 3.5 have been lost. There's only we're got less than basically a million two to go of production over the next 100+ years. The reality is the whole world can buy Bitcoin in matter of minutes. Like when I think about markets and like stocks or bonds that were cheap and value oriented that many hedge funds might buy, the whole world can buy Bitcoin in minutes. And we've got a debt and demographic issue. Like this is inevitable. This is just like inevitable where this will go to major levels. So I think that, I couldn't be more bulled up on that. And so I'll pause there. And I got to let my dog out, but keep talking.
Absolutely. Well, we wanted to ask him a question. So
that's funny. Hey, Phil, how are you? No,
how about you? We should
you know what? I really.
Oh, go ahead.
No? Oh, that was too quick. You didn't even give us a chance to.
No, we didn't even. Come on, we were going to try to switch gears and everything.
I was going to say, you guys need me out because I'm talking too much. So keep going.
And just to let you know, this is like all of your information is a wealth of communication. The way you deliver these concepts are top end, and it's like you're bringing up charts. Our goal is for people to be informed. We can talk all day long. I know I talk all day long. So to hear you present this stuff, to see you present this stuff, it's edifying. I'm pretty sure the audience is happy that you're here, man. And yeah. But Phil, you have a question?
Well, I was really just going to see if we could switch gears over to the Bitcoin treasury stuff.
Yeah.
And I just, because obviously you're a co-founder of the Bitcoin Opportunity Fund. I am very curious on your thoughts about these businesses, one after another, public companies, not that it makes a difference whether they're public or private, public companies that are announcing that they are purchasing Bitcoin. And you being a person who worked in distressed assets, I feel like you might have a different appreciation for operating income and positive cash flows. Does it worry you at all that the majority of these businesses, I'm trying not to say all of them because I know that there's a few diamonds in the rough, but does it bother you at all that the majority of these businesses are seemingly just broke and attempting to use Bitcoin as a unicorn? And of course, I'm framing it that way, so you can push back on me all you want on that, but that is my framing.
No, I think I'm a firm believer in all questions are great questions, and we should ask all these things, right? And we should all be skeptical of everything, and including me in 2015 being skeptical of Bitcoin. And but the answer to your question is no. Like I have no problem with it. Do I think that there's risk though, concentration risk, where it's the government can easily get access to MicroStrategy into a 6102 or something like that? Sure, we could talk about that, and then we can get into probabilities of 6102 was Article 6102 in 1933. Roosevelt basically confiscated everyone's gold in America, or you were threatened with jail or a fine if you didn't deliver your gold to the government, and then they repriced it a year later once they got a hold of it. So I think that I think there's that risk that they could do that. It's concentrated, but again, another chart I'll pull up. I think in general, it's a good thing to have Bitcoin treasury holdings. Why? Because these are going to be long-term hodling businesses. And so if we look at the presentation we gave to our LPs yesterday, so I'm just pulling up slides here, but if you look at like the Bitcoin treasury companies, and this is about 5 of them, right? This is Nakamoto, Strive, Satsuma out of London, MicroStrategy, and MetaPlanet. But you can see kind of in May and June, these things rallied, and then they kind of have come back down the mountain in July and in August. But look at this chart on the right. Like you can see kind of what regular corporate Bitcoin holdings, like think small companies that hold a little bit of it on their company, on their balance sheet, like a 2% weighting. Like that's growing again in the last year. And then the Bitcoin treasuries have gone hyper, and this is well over 1 million now Bitcoin owned by Bitcoin treasury companies. So literally about 5 to 7% of the entire supply of Bitcoin just got gobbled up and is long-term hodled now. This asset class is even scarcer than when we woke up 4 months ago. And so I think that's a good thing. I don't have a problem with that. I think that, yeah, to answer your question, Phil, of some desperate company that has a market cap of 4 million and the business stinks and they go and pivot to this, sure, left part of your brain might be cynically saying, look, that's kind of a scumbag move. They were a dumpy business and they just went and bought this asset to get their stock juiced up to $150 million market cap. But no, I would argue that, like, Michael Saylor's right. There's no other asset in the world that's going to compound at 28 to 40% a year if power law theory is right. And if Saylor's right, it can compound at 40% a year for the next kind of 5 to 10 years. And there's no other assets, very few in the world. I'm not even sure NVIDIA can do that. And NVIDIA is a hell of a business. I mean, NVIDIA actually is reasonably valued if they can keep that growth rate up.
And let me ask you this: you think that do you think that these businesses, let's say the ones that do not, I'm talking about without diluting shareholders or creating bond products to be paid into the future, these businesses that have dwindling or no operating cash flow, do you believe that because of the sustained growth rate of Bitcoin, they are going to be able to navigate these downturns and then essentially be able to capitalize on the boom cycles, right? Like, do you believe that they're going to be able to do that?
Yeah, I mean, I think that, like, so let's go to bitcointreasuries.co here. I'm going to pull up one more screen here. I'm going to shift over to that. And I apologize for people. I'm probably getting you dizzy going around all these screens, but
this is great.
Yeah,
we love this. You're educating us too, right? Like,
this is a good website. One sec. Let me just pull this up.
Okay.
Let me try and broaden the screen out here. Okay. So
stop ACP.
Can you guys see this on your screen now?
Yes.
So I think that, if you look at here's MicroStrategy holding 636,000 Bitcoin, Marathon with 50,000, and the 10th player, CleanSpark at 12,000. I think what you're going to have happen is the top 10 to 20 companies that get scale position in this scarcest asset in the world called Bitcoin, that I think will become, along with gold, the two leading global reserve assets, the way U.S. Treasury bonds right now are the global reserve asset. Forget about the global reserve currency, the dollar. Treasury bonds, as everyone knows, America would buy goods from China. China businessmen would have dollars and not know what to do with it. They'd buy Treasury bonds. Global reserve asset was Treasury bonds. China businessman now is going to be going into gold and probably ultimately Bitcoin if they can figure out how to do that legally in that country because they've blocked it. But I think that what you're going to see is, a scenario where, this asset class is so massive that if you're a scale treasury company that has a bunch of this stuff that now is worth billions of dollars on your balance sheet, now you can use that collateral of Bitcoin on your balance sheet to invest in a widget subsidiary or whatever. Like in Michael Saylor's case, he's already doing it. He's taking 636,000 Bitcoin and he's borrowing against that unencumbered collateral by issuing preferred equity. And that fixed income security, then he is investing that. Go ahead, Phil.
Okay. But okay. So hold on though. But isn't he issuing, right? He's just issuing bonds and diluting shareholders.
Yes, there's no doubt it is dilutive, right? Because even if you're issuing preferred, you're layering the common equity stack below it. But it's accretive dilution because he's diluting the equity, but he's investing in an asset class that's going to compound at 28 to 40% a year. That accretion is going to outweigh the dilution on the equity, and the Bitcoin per share growth and the value when you wake up in 5 years to the equity that's accreted is massive. And so therefore, to answer your question, I think some junky business in America that's doing that is smart to do it. The issue I'm laying out is I think there's only 20 or so that are going to be scale enough to be able to continually go to the flywheel of capital market issuance.
Yes.
And so therefore you got to be mindful of who are the right management teams here that can scale, who are the right, because the capital markets won't always be open, who are the ones that'll manage their balance sheet with intelligent leverage and not doing stupid things. So I think that it's key, and that's something we're focused on with Bitcoin Opportunity Fund. We've tried to try and partner with management teams where we can buy in at 1 times MNAV to have margin of safety. Effectively we own Bitcoin. We might as well just swap into this treasury company with upside. And then, can they be a smart management team and make good capital allocation decisions because they're basically portfolio managers? Can they manage intelligent leverage? They have a leverage finance background to understand that. This is our backgrounds of what we've done. So, I think there'll be 20 winners.
Question.
Interesting.
So, you said there will be 20 winners. Obviously, there's a lot of Bitcoin treasury companies, and many of them, like GameStop. GameStop obviously is a real company. Real. They have other business units or business models other than collecting Bitcoin. My question is, these other companies that won't be able to go back to the flywheel, are they at risk of simply a 95% drop, kind of like what cryptocurrencies experience during the bear market, 99% drop, or are they really truly at risk of bankruptcy and being a blip on the radar and basically no longer existing by the time we're going back up in 2027, 28?
Yeah, I think to me the balance sheet anchor. I mean, it's the class. They will be the classic value equities. Remember when Buffett, when he first started out, before he bought. Well, it's a Graham and Dodd value analysis, right? Where you can buy market caps inside of cash. So if they had 100 million of cash in the balance sheet, but you were buying them at 80 million, you could liquidate the thing tomorrow and you made money. You picked up 20% return, right? So I think that, look at Fold as a good example. Fold, I'm pulling Fold up right now. It trades at $150 million market cap. It's got debt, so it's got 220 enterprise value. I can't remember what Fold. I should go back to the sheet to see what Fold's Bitcoin level is, but
maybe 4,000 from my memory.
4,000, right? I can look it up here. Actually,
I'm looking right now.
Here, I got it here. Fold is. Let me get my glasses back on.
1,490.
Yeah, 1,492. So call it 1,500 Bitcoin. 1,500 times $100,000. Is basically $150 million of value. And here, I'm going to go back to the share on the screen on Bloomberg. So what we just said is Fold's got $150 million of Bitcoin. It's really more because it's 110,000, right? So it's got $160 million worth of Bitcoin, and it's trading at a 220 enterprise value. You got to count the debt. You can't just look at market cap. So it's trading at a little bit of a premium to that underlying, right? Probably 220 divided by 160 if I'm roughing it. They're trading at 1.37 times MNAV or book value. But to answer your question, if we're right and Bitcoin goes to over $1 million a coin in the next 6 years, well then that 150 is like $1.5 billion of value created at Fold. So that stock's not going to be at 220. If it is, I'll step up and buy that all day because it's now Graham and Dodd value investing. It's Buffett 101 of. So the answer is I don't think these things will crash. They'll be anchored to it. Moreover, I think MicroStrategy, this is beautiful for them. When the capital markets someday aren't as open or flourishing for them as they once were, if they're trading at a 1.5 times MNAV, hypothetically, like they are today, they'll just come and turn around and buy a lot of these businesses like Sequans, which we own. This thing's trading inside of like 0.8 times MNAV. And so,
that would be the Swan part.
Yeah. I mean, this thing.
Aren't they doing a reverse? Aren't they in the middle of doing a reverse share split?
Yeah, and all that stuff. So
membership.
That's smoke and mirrors. It doesn't change anything. That's just like it doesn't change the accounting or the math of the true.
No, it doesn't. But
where I'm saying is, and I've talked to the MicroStrategy treasury team about this just 2 weeks ago. I said, look, you guys are going to be able to turn around and just do acquisitions of companies like this, stock for stock, saying, okay, Sequans, I'm MicroStrategy. I'm at 1.5 million, 1.5 MNAV, hypothetically, let's say 2 years from now, and it's a downturn. Come merge with me I'll pay you 1.1 times MNAV for your Bitcoin, and I'm going to sell your communications business or semiconductor business. But now your Bitcoin is now mine. That's accretive to MicroStrategy instantly. And the shareholders of this company just got lifted up by 40% on the acquisition. Now the Sequan shareholder says, yes, thank you very much. I'd like MicroStrategy stock instead of this. I'm just pointing, this is a hypothetical purely I'm throwing out there. All right. Now, a lot of things have to happen. The Sequan's board would need to want to do that. MicroStrategy would want to actually have to make that offer. I'm just saying, I think that that's what's going to happen with these treasury companies, the ones that aren't in the top 20, that aren't thriving and flourishing, that I think the small ones will do fine. Fold, for instance, with its 1492 Bitcoin, that'll be an easy takeover target because it'll have $1 billion worth of Bitcoin on its balance sheet. That won't trade at 220 enterprise value, 220 million enterprise value for long. So like, yeah, that's how I see that. This is turning into value investing 101. And I think it'll just see a period of consolidation at some point in the next handful of years.
I just want to say real quick that it's funny. And I have this little group chat on Telegram. And I think right when Fold said that they're going public, and Phil remembers this, like that was like my first target. I was like, I'm going to short them at the beginning of the bear market, whenever, like I would be able to predict that. But it's just so funny that out of all those companies, you explicitly said like Fold, easy acquisition target. And in other words, they're kind of not going to make it on their own, generally speaking. But fortunately, if they get acquired, they can get acquired, and their shareholders could reap the benefits of that acquisition news, assuming that they haven't already had a net loss for a while.
Yeah. Well, by the way, I just wanted one more point. I just saw someone point in the chat there saying this dude should study history. These things should trade at a discount. Can you pull up the slide again?
Get it, David? Okay. Yeah, it's at Boston, man. I can't handle these East Coast.
He's getting
the Boston guys. They've got thick
I'm in California,
yeah,
man.
Don't worry, we're gonna
surf, man.
No, I was gonna say I'm showing my Boston Irish chippiness where I have to respond to that one guy's comment because I want to explain something.
Yes, sir.
JP Morgan stock right now trades at 2.3 times book value. Huge premium to its book value. Price to MNAV is nothing more than a book value, in my opinion. I've heard people talk about PE. It's book value in times like this when these things come back down to earth. Yes. Brookline Bank, that Phil knows, having lived in Massachusetts, up Brookline outside of Boston where all the hospitals are, trades at 0.8 times this book value. So I agree with that guy who just said study history, but that's my point. The top 20 Bitcoin treasury companies will thrive. They'll trade at a premium over 1 times MNAV. I have no idea if they'll trade at 3 to 5. But I think that if you look at but I think the smaller ones, like the Folds as an example there, just pick on them. These will trade at discounts. Probably you're right, because they don't have the scale if they don't get to be scale. But I look at JP Morgan stock, and if you look at, let's just do this, I'm being long-winded. If you look at JP Morgan's historical price to book, Bloomberg, hopefully it will cooperate. If I go max on this, JP Morgan right now is trading at 2.4 times book, we said. Historically, it's traded higher, but on average, if you eyeball that, it's about 175, 18. I would argue that MicroStrategy has probably got the best probability to trade consistently at a 175 to 20 MNAV. It's trading at 1.5 today. So, by the way, I think one of the best trades I've seen this week, and we put it on at our fund, is a leap call option on MicroStrategy in Jan 27. So we got 15 or 16 months till expiry, where if MicroStrategy goes between $500 a share and $630 a share, we'd make 7 times our money. And that's getting better every day as MicroStrategy goes down. And so I love this trade because I'm willing to venture to bet that in the next 16 months, Bitcoin can go to 150,000 plus. Forget about like 200,000 where Parallel said it should be in April, 150,000. And I'm willing to bet that MicroStrategy can go back to a 1.75 MNAV from 1.5 today during that bull run. And I'm willing to further bet that MicroStrategy can add probably 100,000 of Bitcoin a year to its existing 636. When you run all that math out, you'll conclude that the stock should be around $700 a share, or 800 potentially, depending on your MNAV multiple assumption. And I'm trying to be conservative. We'll make 7 times our money on our call trade that we have on. It's a call spread. You buy the 500, you write the 630. I think that's a phenomenal, best trade I found this week. It gets me really excited and jumping out of bed. I think my wife sees me smiling again for the first time in a couple of weeks with that one. But I think that, just an example, I think that MicroStrategy is the JP Morgan of this space. Bitcoin will be, along with gold, the collateral, the global reserve asset. And I think the value of those top Bitcoin treasury companies are going to be thriving. They'll be like JP Morgan at a 2.4 times book, Brookline Bank, the small ones, like think your small Bitcoin treasuries. Yes, I agree with that guy. It will trade at a discount, but I just want to be clear on that point.
Right on. Go ahead, Phil.
Yeah, so he made another point, and I totally agree with this. If the company can create value from operations, I know. So let me ask you that, like, it doesn't, because I've seen this in the past where businesses, right, while the market is exuberant, people are willing to lend cheap rates, and then what ends up happening is that the market sentiment changes, and seemingly no matter what the value of those assets are that they have on their book, when people have no appetite for the shares, then the business can't actually, in MicroStrategy's case, right, he can't actually go out and sell those shares. I guess my point or my question is, do you ever see a scenario where MicroStrategy, well, maybe not necessarily just MicroStrategy, but the bigger Bitcoin treasury companies become sellers of their actual Bitcoin?
Yes.
And the reason why I say this is because I've gone through, and I'm sure, anyways, the math that I went through for last year's numbers on MicroStrategy essentially indicated, this was without the dividends, that they have to pay out, I think it was over $60 million a year, or a quarter. I don't remember what it was. And they were only taking in like 55 million. So they were already down. And
that number's higher now, Phil. They have to pay out over $500 million a year in preferred dividends, right? So I get it. Let's talk through that. That's a risk factor. That's partly why the thing is getting hit, because they'd come back and tell you that we'll just issue more preferred stock. And Josh Mandel and others will say, well, that's a Ponzi scheme. Okay, fine. But then every stock in the world is a Ponzi scheme. And if we're talking about that, let's walk through it. I get that.
I think it's and before you go on, I think it's the speed at which they're issuing stock that is so shocking. Because there's no business operations, that's like their only choice. But continue.
Well, I get it. But I think what he's saying is, and maybe I've drank in the Kool-Aid too much, because we're big investors in MicroStrategy. We talk to the treasury team a lot.
So am I. I got options.
But I think what those guys are saying is, look, they have full confidence, as do we, that this Bitcoin price is going to be a lot higher when you wake up. Forget about 6 months from now. I have no idea. But 2 years from now, you're going to be a lot higher in Bitcoin. Pick a number. 200,000 a share? You want to be conservative? Let's go there. And I get it. 4-year cycles. I get it. But at some point in the next few years, even if we go through a downturn, this will trade at, say, 200,000 Bitcoin. Just pick a number. And let's say they have 700,000 only then. They weren't able to keep adding to it because the capital markets went into a decline. But, you're talking about $140 billion of value of Bitcoin that they would have in that scenario. The market cap, the enterprise value is just over 100 billion today. Now, as I showed you in that JP Morgan chart, you should have noticed in 2009 and 2010, JP Morgan traded at under 1 times book value. Okay, for a little bit.
Yeah.
Grayscale in the Bitcoin space traded at a discount just 3 years ago, 20%. They can trade at discounts, and capital markets can close. So therefore, I'll never say never that MicroStrategy doesn't have to start selling some of that Bitcoin to pay dividends if we're in a downturn.
Unless they become positive cash flow from operations.
They're not doing it. Let's call a spade a spade. The underlying business
No,
generates.
I appreciate this. Seriously, David, I appreciate this because you are being, in my eyes, you're being realistic. Like, you're looking at this, and I've seen so many people just drink the Kool-Aid completely. Like, no, I'm sorry, I didn't mean to interrupt.
I'll tell you a funny story.
Right.
Larry, James, myself, and Michael Saylor were sitting at Michael's house. He probably won't remember this. This was 2022 or 2023. And one of those, we were down in Miami at the conference, and we went over to his house on Saturday for a cookout. It was the four of us sitting around talking for an hour and a half. By the way, it was awesome. Michael was awesome. The download of thoughts, and he's one of the smartest guys I've ever met. Just on that one day, I can remember walking away being like, I teased Larry and James in the taxi out. I said, that's like sitting with Ben Franklin in 1776 and picking his brain.
I'll tell you, the Breedlove, that was the Breedlove interviews. That's the reason why I'm here today. Like, just watching him speak, I'm like, someone else got to hear what he's saying through me, because this is too big. But anyways,
so now
continue.
Let's pull ourselves out of the love affair with Saylor for a moment.
Yeah.
He's a human being. He puts on pants 2 feet,
Amen.
2 legs at a time, like we all do. So let's be careful. But he's a very smart guy. In any event, he was making the point. I'm kind of losing my train of thought. I said to him in that meeting. I literally turned him and I said, like, people were coming up to him and being like, "Oh, Michael, this and that. I love your yacht. I love the house." This and that. And so I said to him something about, like, let's talk business, like about Bitcoin. And I could tell, like, he didn't want people kissing his ass. He wanted to talk. He likes talking business, like this Bitcoin business.
The real thing.
So I said to him, "Michael, at what point did you decide you needed to pivot in your business?" And he looked at me like I was the devil. He hated that word pivot. He said, "It's not a pivot." And I said, I smiled at him to say, I'm not. But we had a nice discussion for an hour and a half. But Michael's point was, it's not a pivot. But I would challenge him on that too. Like, the business isn't doing great. The underlying software business is very mediocre and average. That's why I would argue he pivoted. He doesn't like that, but I'd say it with all due respect, because I really respect Michael a lot.
Mm-hmm.
The point is, there is no underlying cash flow that's going to meaningfully pay $500 million in dividends. Now, the good news is some of those dividends are they're cumulative, where you could suspend. He's got ways to play defense. The converts, sure, I suppose some of those could mature and they won't just convert into equity, but most of those converts I don't worry about. They're well in the money. They will convert into equity. And if I could pull up the chart. Actually, let's do it. Again, I'm making you guys dizzy. I keep showing you pictures. I'm going to go to another chart.
No.
Here's MicroStrategy. Let's go to Bloomberg. Their debt maturities. The beauty of them is that most of what they're doing is now over $6 billion of perpetual preferred, meaning it's out here in infinity. It never matures. Here's all their convert stuff. It's termed out. The real first one doesn't kick until 2028. That's incredibly easy if they had to refinance that and not have to just have it automatically convert. I still think these will convert, but let's say they don't. Well, look, guess what? He's going to have $100 billion, call it 70 to $100 billion of Bitcoin value, even in a downturn, that if we want to model it at 50,000 Bitcoin, let's say, fine, you're still going to have, $39 billion worth of Bitcoin on the balance sheet to go make $1 billion payment on a convert. Like, that's an easy secured loan. We at the Bitcoin Opportunity Fund will make that loan to them if we had. Like, that's a wonderful piece of paper because you're secured. He can manage through this leverage. It's perpetual. So I agree with you, Phil, to land the plane. He may have to sell Bitcoin if there were ever a downturn. I think they'll manage through. I'm more bullish and optimistic.
Mm-hmm.
I think that they are well positioned to be the leading Bitcoin bank equivalent, the JP Morgan of this space. I think personally this thing will trade at over 2 times book value. It'll be one of the rare ones with the highest valuation. But yes, downturns will happen, and you got to pay attention to how they manage this balance sheet. And I think they're doing it intelligently as they go. So I'm telling you, I think this is one of the most best investments in the world right now is MicroStrategy. Again, 16-month out call options I love personally because I'm willing to put a little bit of risk into it. But I think just owning that stock and compounding for the next 5 years, everyone should have that as a core position. It's like buying Amazon back in 2003, and you're just going to compound over the next 20 years. I think that's MicroStrategy here.
Brilliant stuff. I appreciate. Makes me feel good.
I'm like, no, wait, I've got 10 more questions about this. No, it's okay.
Yeah, I know. We got to respect your time, and we have to respect a very, very important topic that just came out yesterday. So before you leave us, I want you to dump your thoughts on El Salvador buying $500 million worth of gold. And is that the wrong one?
Hold on. Oh yeah, the first one was
$50 million worth of gold. That was announced yesterday. El Salvador Maxi's in shock. I love the memes and the reply when I saw that tweet. What are your thoughts on that?
I think it's smart diversification. Larry and I used to get made fun of by Bitcoiners over the last 5 years saying, what are you idiots doing in gold? You're a bunch of dinosaurs. And we'd get gold bugs that would yell at us saying, you idiots with Bitcoin, that thing is trash and speculative. And Charlie Munger's got it right. Guess what? They're both the two non-counterparty monies in the world, as Dalia's been talking about. I encourage people to listen to Dalia's podcast with the CNBC reporter, I'm forgetting his name, from about a month ago. As Dalio talks about, gold and Bitcoin are going to be the two non-counterparty monies in the world. The Far East central banks want gold. They prefer that. Why? Partly because of the anonymity. It's not on a ledger. It's not on a blockchain. No one can see the flows of capital. I think Dalio's got a good point on that. But Bitcoin, as Dalio points out, is the scarcest asset in the world, as we've talked about, and it's tiny. It's going to grow massively to catch up toward gold. It's more asymmetric than gold. But you don't know which one's going to zig or zag first. In my opinion, you want to own both. And I think it's a matter of your waiting. Like, if you're young and 30, well, then you probably should be, you got plenty of time to build wealth and working years ahead. You probably should be more overweight Bitcoin than gold by far. But if you're 72, well, maybe you want to be a little bit more balanced and you want to have a little more gold in Bitcoin, perhaps, because it depends on your risk appetite, what your financial profile looks like. The point is, Tether sees it, El Salvador sees it, the U.S. sees it, Ray Dalio sees it, Paul Tudor Jones, we see it. You want to be diversified. These are the two best assets, I believe, in the world to own over the next decade. And in our case, with Larry, it's, we own Bitcoin and gold and silver miners. That gold and silver miners are usually 2 to 3x beta to the gold and silver bullion price moves. Why? Because there's operating leverage. That, remember, if you have a fixed cost business where you mine gold at $1,400 an ounce and gold goes from 3,500 to 5,000, that's basically straight profit margin to you, because your fixed cost only goes up a little bit with the inflation. It's massive cash flow growth in miners of gold and silver miners. And that's why those stocks are flying this year because of that. We think that can continue. I think in Bitcoin space, this Bitcoin store of value story is going to grow massively. Again, the two non-counterparty monies in the world, gold and Bitcoin, they're going to grow massively. Now, I'm not sure the sovereigns will be as fast to come into Bitcoin as they are in gold. And that's why gold is worthwhile. But I think that all of it together is just going to fly. It's just Gresham's law. This is going to be the safe harbors that people move to. They won't move to the dollar. They won't move to stable coins, in my opinion. They won't move to U.S. Treasury assets when rates are going higher. You lose money in bonds when rates go higher. They will move to gold and Bitcoin, and you're already seeing it.
It's pretty bullish. It's pretty bullish. We're getting more questions about the MSTR stuff, but unfortunately, we're going to have to.
Well, I can come back on another day.
Yeah, we need to come back another time and do round two.
Thank you for coming on, Dave. And before Phil gives his ending thoughts, I just want to say it was a pleasure meeting you from years back, and you supporting me and coming on my shows when I ask. I love the East Coast bristliness of your delivery. I love your ability to engage with the audience and say, look, I got perspectives too. You defend, and you're constantly defending your position from gold bugs and from Bitcoin maxis. And it takes a lot of conviction to have that.
I'll say that those are all good questions and good points. I respect all the people's points of questioning. I think that was a great question, for instance, about, listen, this guy an idiot. They should study history. They trade a discount. Like, let's go through that. Let's be open-minded. I need to be open-minded to that. And I'm just trying to tell you, I could be wrong, but I think in probabilities. I think the probabilities are that MicroStrategy is going to trade at a much higher multiple than you think. I think some of the other smaller ones will be challenged. That's why I think it's critical for Bitcoin treasury companies to get as much Bitcoin as they can. I think it's dangerous to do this Bitcoin yield play of, well, no, it's going to grow. That price to MNAV is a PE to growth rate. At the end of the day, it's a price to book. And the most important thing is this book value is going to grow so fast in Bitcoin dollar terms and euro terms and yen terms over the next 5 to 10 years that those companies with a sizable stack, their balance sheet's going to grow. And you say, well, but what if no one's buying the stock? They're Graham and Dodd value plays then. You're going to be buying companies at 20 cents on the dollar because you could buy the company and liquidate it tomorrow, as Buffett was talked about. If it's got again, in Fold's case, if it has $1.5 billion of Bitcoin value when we wake up in the math we laid out and it's at 220 today, you go buy that at 20 cents on the dollar and you'll go liquidate it and make a huge return, a 4 to 5x return. Some of the best investments in my old hedge fund was November of 2008. We were buying GMAC bonds.
Oh my God.
In November of 2008 at 37 cents on the dollar, because the math we were doing, we were looking at like Daewoo bankruptcies in Korea and saying if GMAC and GM go bankrupt in the middle of that crisis, we thought that worst case GMAC bonds would be worth 63 cents on the dollar, and we were buying them at 37. If it didn't go bankrupt and they dug their way out and the government bailed it out like it would happen, it would go back to par. So you were going to make 3x your money almost. Heads I win, tails I win. Like, it was beautiful. We made that a 20% position. Guess what? That thing kept going down to 19 cents. And so definitely there were days you were running to the bathroom wanting to throw up your lunch, but you just kept underwriting it, saying, am I right? Is this correct? Is this math correct? And sure as hell, you ended up having an average cost of like 22 cents on the dollar, and the thing went back to par. I mean, that's kind of what it reminds me of when, if you believe that Bitcoin and gold will be the global reserve assets, and you believe, therefore, these balance sheets of Fold and others are going to then grow up, people will buy them not for their underlying earnings growth, because there is not a lot of earnings growth at MicroStrategy or at Fold, sorry to say, but there's phenomenal balance sheet value, and that's what you're going to be buying is 40-cent dollars all over the place. So the market will find the value here because you can liquidate these things the next day. I have all the faith in the world, guys. I think you just kind of hang tight. I have no idea where Bitcoin's going in the next 6 months, but I have a very high probability in where I think it's going over the next 2 to 5 years. You have no idea. It's a wonderful time to be investing.
That is a great way to end the show, by the way. Absolutely awesome. Super bullish. We got to get you to your next meeting, man. You have like 12 minutes.
Thanks, man.
No, thank you. Thank you so much for joining us. And yeah, guys, this is going to wrap up today's live episode of Pleb Underground. Don't forget to check us out on our audio-only platforms, Apple Podcasts, and on Spotify. And if you want to stream us sats, check us out on fountain.fm. All right. David, one last time. How can people find you? If they want to reach you, they want to ask you more questions.
bitcoinopportunity.fund. We are open to accredited investors. And so at Bitcoin Opportunity Fund, you can fill out your name, testify you're accredited, and then you can get more information on us there, and we can reach back out to you. But yeah, happy to. And I'm also on Twitter at, I had to actually reboot my Twitter there. I had the whole thing got hacked, but it's, what is it? D Foley, BOF, I believe is my Twitter handle. I'm kind of, I'm a little more quiet on Twitter, but
that sounds good, but we'll put you in the show notes as well.
Yeah. Awesome. Thanks, guys.
All right, everybody. Have a great one. Thank you so much. Have a great weekend, and we'll catch you next week. Peace.